All right, today is day 3 of the road to 100K, and today we're trading the PB Blake or PB trading mechanical model, right, where they use those inversion fair value gaps and their whole stuff, right? I'm gonna credit them for this model. Obviously, I didn't create this. I have my own model, but in this trade, I use their model. I'm gonna credit them for this model. Um, if you guys haven't watched them, I recommend go watch them. They're called PB Trading or type in PB Blake, right? Just search up PB Blake on YouTube and search up the PB Blake Mech model specifically, and then just find videos, watch their videos, right? They're really good. Their model actually works, right? This video is just here to show you guys that their model actually works and that, we had a good setup today, right? And obviously, this is in replay mode, so it's not like currently like today's date, but this is like in previous data, right? Because we're back testing. So we're just proving that the model actually works, and then we're gonna actually use it in the prop firm evaluation once we have enough data, once we're profitable, right? So the first thing we saw here was a bullish for value gap. So we marked it out. We're like, okay, cool, 4-hour bullish for value gap, right? And my overall bias for the day was bullish because we were getting closer to this buy side liquidity, and specifically we're getting closer to this 4-hour bullish for value gap. So my bias was bullish, right? The first question we ask ourselves is, where are we delivering from, right? That's the first question we always ask. And right here, we do have sell side liquidity. We sweep sell side, we're going to the upside, right? So the answer to that question is that we're delivering from sell side liquidity. That's the first question you always ask yourself, is where are we delivering from, right? So if you guys have like a notebook or a journal that you use, write down that first question is, where are we delivering from, right? And the second question is, what ICT concepts are we respecting? What are we disrespecting, right? So in this case, we're respecting these bullish fair value gaps, right? We're respecting bullish fair value gaps, and we have bearish fair value gaps here. So if you guys look at this, bearish fair value gap, another bearish fair value gap, right? We're disrespecting those. So we're respecting bullish and we're disrespecting bearish. That's how you get your bias, right? And then you also want to find out your draw on liquidity, which is this for bearish fair value gap. So first question is, where are we delivering from? Second question is, what PD arrays are we respecting? What PD arrays are we disrespecting? And the third question is, what is the draw on liquidity? Once you have answered those 4 questions, that's when you're set for trading, right? That's how you know you're set, is once you answer those 3 questions. So now we can go on to the 15-minute time frame where I kind of did my analysis, right? So on the 15-minute time frame, I saw this, right? I saw it's technically like right here. Right, we saw data highs, we saw data lows. So I just marked it out, right? Data high, data low just means you have a news candle, right? So there's like some sort of news that comes out on this date, and then you just mark out the high of that candle and you mark out the low of the candle, right? That just shows you that, hey, we had something significant happening, and that's how we got these levels. So these are like pretty significant, right? So that's what I did. What I was kind of confused on is I didn't know if we were gonna go and trade back into this 4-hour fair value gap that we marked out, right? So right here on the 4-hour time frame, we marked out this 4-hour FVG. I wasn't sure if we were gonna trade back into it and then go higher, or if we were gonna just go higher without tapping into it. So that was what I was kind of confused on. But I was like, okay, we'll just kind of like keep that on the back burner, right? We're gonna think about it, but we're just gonna kind of see what happens, and based off that, we'll get our technicals, right? So this is what I did, just data highs, data lows. And then I went onto the 15-minute time, on the 5-minute time frame, to just see like kind of what was happening, right? Just kind of sitting through this, and then, oh yeah, right here. So this candle right here is what took out all of this liquidity, right? So we had some kind of like, I'd say, relative equal lows. We had data low here. We have this low, right? We swept all of this, and we even touched this 4-hour bullish fair value gap right here that we marked out, right? We touched this 4-hour bullish fair value gap. And yeah, that was like a really good confluence for us, right? Is that, look, we have all of these, right? We swept all of this low resistance liquidity right here. and we also swept this sell side liquidity low, swing low right here. We also tapped into this 4-hour bullish fair value gap. We tapped into this kind of right, this 5 minute. We retouched it again. We tapped into it again. And that was like a pretty good confluence, right? So at this point, I was looking for inversions to the upside, right? And that's what I saw, right? So on the 5 minute time frame, I saw this and I was like, okay, cool. We have a candle going up. And then I looked at other time frames. So I was looking at the 4-hour, 4 minute time frame. I was looking at the other ones, and then I saw this right here on the 3 minute time frame. I saw this one, inversion fair value gap, right? Technically, saw it right here. All of this is on um, replay, by the way. It's not live trading because it's just back testing. And then we're like, boom, right here, inverted it. So what did I do? Right, we got an inversion. We sweeped all of that, all of those confluences right there. We sweeped all of that. We tucked into these fair value gaps. Now we're heading back, right? So I just entered a position right here. My stop loss could have been right here, but I was like, okay, that's like too much risk. So I kind of reduced it to right there. And then if you look at this, our target would be this buy side liquidity data high, right? But if we drag this thing here, not exactly a one-to-one. So what I did is I just kind of extended it a little tiny bit, just like right there. Yeah, and then I would just take off the position right here. So just like a tiny bit higher. And honestly, like I feel like, price, it would go like this high. Like it's possible, right? It's not just gonna touch this line and then just drop down like crazy, right? It's not gonna do that. It's gonna go a little higher. Like look at this, right? We had data lows right here. We came a pretty good amount right here, right? We had pretty good displacement down, and then we went up, right? We had a good manipulation. It wasn't just like a really quick thing. So I was like pretty confident in this, and I was like, okay, like that's fine, right? Just a tiny bit extra. It's a good one-to-one. So yeah, I entered on the 3 minute time frame, and then I was like, okay, cool. Just kind of waiting, and then boom, right there, we hit, right? We hit, we got to take profit, easy one-to-one, right? And we got our profits. And that's the Mech model, right? It's simply just the highest time frame inversion you see. So you look at the bigger time frames like 5 minute, 15 minute, 1 hour, 4 hour, right? Look at those time frames. You find levels and stuff like that, and then you do your execution on the 1, 2, 3, 4, and 5 minute time frames. So you would just be looking for price coming down here. You just look at this leg, you would identify fair value gaps, and then the second those fair value gaps get inverted, you enter in, and then stop loss, take profit, easy profits, right? That's what it is.